got to figure out, they've got to struggle to find different insurance. Insurance rates are rising. Certain insurers might not be able to provide same sort of coverage. There's a lot of confusion around that. And while Trump can pay lip service and say that he's going to help solve this problem, until there actually is a solution, I don't think the market is really going to react very much to those words.
Okay, so let's talk about the oil dynamics here. I thought it was really notable that Iraq said that they're going to have to start cutting or reducing production because their storage levels have reached capacity. What you're seeing is some key OPEC producers having to rethink not just production, but exactly how they get the oil out of the region.
Oh yeah, absolutely. I mean, I think one of the, when you talk about how they get oil out of the region, one of them, of course, famously would be Saudi Arabia, the largest producer in the region. They normally kind of ship it out of the Persian Gulf, and they have to go through the Strait of Hormuz or that region. But they're thinking about potentially looking at shipping it on the other side, the Red Sea, and exporting it there. Now, the Red Sea, of course, has their own issues, but that doesn't have the bottleneck that we're facing at the moment with the current crisis and conflict stemming out of Iran. I think what's very interesting is there are two problems that the market is really closely looking at. You don't just have the issues of transportation and logistics, right? Strait of Hormuz, big issue, can't go through at the moment. We've discussed that, as well as whether ships are willing to go there. You've also got, because this conflict has increased across the region, you've got small attacks with drones or intercepting drones, damaging oil fields, damaging infrastructure to a degree that we just haven't seen in decades. And so because of that, the market is trying to weigh both of those things. So you've got to figure out, okay, you've got the logjam of facilities and the logistical issues, but they also have facilities that might not be able to operate or are operating below capacity because they have to shut due to damages.
Yeah, and I should say also on that point, and let's pivot and maybe talk about the gas markets now, because the price rises there have been nothing short of astronomical the last couple of sessions, mainly on back of the news that Qatar Energy has suspended the production of LNG, and we still don't have an update on what's going on there. Are the dynamics of the gas market different from oil in that, number one, it's very difficult to find an alternative route to get the gas out to customers? Number two, the inventory situation, especially for many of these European buyers, suggests that they don't have a lot actually of inventory, and they will scramble to buy gas at potentially a lot higher prices later in the year.
Yeah, I mean, I think there are just absolutely different dynamics from gas to oil. So for gas, Qatar, world's biggest LNG exporter, they provide 20% of global supply. Now, there's other, in the oil market, there are other kind of levers that you can pull. You can get different, there's a vast fleet of thousands of ships. LNG, they're only like 700 or 800 LNG ships. So there's not a lot of supply on the water. Plus, there are very few levers that you can pull in terms of increasing output, right? There is no spare capacity available in the LNG market. The U.S. is boosting production incrementally. A lot of that LNG goes to long-term buyers. Australia, the third largest LNG exporter, they can't really increase it. Southeast Asia, those exporters are dealing with their own demand issues, and they can't increase output because they've got to feed consumption at home. So you've got the situation where the market just doesn't have that much more elasticity. At the same time, you're right, the logistical issue, you can't reroute LNG. It's got to come from the plant. And so it has to go through the Strait of Hormuz, and that's not an option at the moment. Plus it's shut down for safety reasons.
Yeah, Stephen, thank you for bringing us the insight and perspective on what's going on there. Here's an industry to use our data. Well, coming up, South Africa says it built a fiscal buffer strong enough to withstand global shocks like the Iran war. We'll bring you the details next. This is Winter.
Equity indices built on opinion? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
We started on this journey with the simple idea that individual investors should have access to the returns and diversification benefits from alternatives. The mutual respect and trust between Blackstone and Wells Fargo is really, really special. And when I look out over time, that gives us a lot of confidence because what's our business about? It's making people's retirements better. And when you think about a mission-based firm like ours, yes,
Welcome back to the Rises Middle East and Africa. I'm Marcus Dubai. U.S. State Department announced plans to help evacuate Americans who want to leave the Middle East amidst the war with Iran. In a statement, the department said it would send airplanes for citizens seeking to leave the UAE, Saudi Arabia, and Jordan. It's also offering ground transport for people who want to get out of countries whose airspace has been closed. Airlines around the globe are suspending more flights to additional destinations across the Middle East as the scope of the war expands. According to Flight Radar, the disruptions have led to more than 12,000 flights being canceled, including in major transfer hubs such as Dubai and Doha. South Africa says it's built a buffer strong enough to withstand global shocks like the Iran war. Treasury officials say it would take a very large shock to derail the country's fiscal plan. Chief Africa correspondent Senator joining us from Johannesburg. Well, today the big theme of the show, Jen, has been how what is happening in this part of the world is beginning to have global repercussions, particularly as it pertains to commodities prices. How much of a buffer has South Africa built up here? Fiscal buffer.
Right, Jamana, if we just take a look at what we are hearing from Treasury officials prior to the weekend's escalation, they had really been on this roadshow, really showing that South Africa had turned the corner and potentially were on the path to stability. Now they're trying to continue on with that message. Of course, the situation has changed quite a bit. So we spoke to the Director General of the Treasury, Duncan Peters, and he said, yes, it would take quite a big shock, and they're projecting actually a primary surplus still of about 131 billion rand in the fiscal year through March of 2027. That still is going to stabilize South Africa's debt to GDP. And then that even is about 60 billion rand more than the fiscal surplus that we're seeing in this year. What Duncan also, though, did tell us is, yes, it would take a significant shock. It would also potentially take something like an increased amount of government spending in around 60 billion rand more government spending that would derail this path of stability for South Africa. So still trying to put out this message that there is still stability in the economy, especially if you take a look at the period in which prior to the weekend's events South Africa had been on. We, of course, saw the rand strengthening before the Iran war, and also this era of poor public finances, from former President Jacob Zuma. They were trying to put on this front that really the country had turned a corner. But I think, as you've been talking about all throughout the show, is there's still quite a bit of unknowns, and especially when it comes to crude and fuel prices here in South Africa. That is the big concern, and so that's really what the Treasury is at least trying to put out forward in terms of messaging at this point.
Yeah, how sensitive is our South African finances to the price of oil, and what is the scenario if oil prices keep trending higher and stay at these higher levels?
That is the real concern. South Africa is a net importer of crude, and so all analysts